If you're a family who are looking to own and buy real estate in the city of Toronto, I mean, not everyone wants to necessarily rent, and some people do want to own. And if you're now fighting against small developers and builders for sixplexes, it might actually start increasing the price of some of these homes in these neighborhoods, right? We are sitting at 9.6 months of inventory. So we are approaching on a year to sell. That is a big number, and that number is not going to change overnight. If you're a buyer, there is a massive buying opportunity there. If you're a seller, I would say to hold off as long as you can. Hey there, people. Welcome back to the Under the Radar Real Estate Podcast. As always, I'm your host, Josh, and it is now July of 2025, and this is episode number 27. I can't believe that it's been just over 2 years of me doing this podcast. Any of you who've been watching since day one, thanks for being here. We're going to continue moving forward, and I'm just going to say right now, we're actually going to be launching I'm going to be part of a second podcast launching really soon, so watch out for that. Hopefully by fall this year, it's going to be launched. That's all I'm going to say. That's the only little tidbit. But anyway, let's dive right into things because, like I said, it is now July. And as always with our podcast, we are going to review the numbers from June of 2025. And if you've been following along this podcast, it's a lot of the similar themes, all right? Not a lot has really changed in Toronto real estate since the month prior or even over the last 3 months, right? So it's going to be a lot of the same themes and a lot of the same stories. And later on in the podcast, we're also going to quickly touch on a topic that's been going around the real estate industry in Toronto, and it has to do with the Sixplex guidelines. I'm going to give you some of my thoughts on that and give you just kind of my opinion on where things are going with that. But before we do that, let's talk numbers. Let's review the numbers from the Market Watch that just came out today. Luckily, I had some time to record it today. Last couple podcasts, I had to wait a few days or a week because I was busy. Still am busy, but I have to some time this morning to review them because they're fresh off the presses. All right, so you should be able to see it right here on my screen. Let's start, as always, just reviewing the overall GTA numbers for the city of Toronto. So that's over here in this year-over-year summary, right there. Okay, so sales down 2.4%. That trend has been continuing. Not a huge drop in sales from last year to this year. Not really surprised with that. If anything, last year around this time is when the market really started shifting and changing to the new reality we're in today. So that's not really shocking, and we might actually start seeing that number close a little bit more. We're probably more of a balance in terms of like year over year sales numbers, right? So volume of sales activity is still low, and I don't really expect that to increase. So we won't really see those sales numbers really change. And there was a TD report on the condo market, but kind of just saying that like even the banks don't really anticipate sales to start to recover until next year. So I would anticipate this year over year change number to kind of stay around the same as we move forward throughout the year. New listings, they were up still 7.7% year over year. Active listings up almost 31% year over year. That's a really big number. We'll get into that in a second. Average price down year over year. And spoiler alert, when we look at the month over month, while we have been trending month over month of an increase in price, we actually now are starting to see a reversal where year-over-year pricing is starting to go down. Some of that is due to seasonality, but something to keep an eye on as we move forward throughout 2025. Days on market and average property days on market also up, right? So homes are taking a lot longer to sell, right? So average property days on market, which includes properties that have been terminated and relisting, you're looking at about 42 days on market to get your home sold, which is not surprising to anyone who is selling a home right now or realtors who may be watching this who have listings, right? Listings are not selling that quickly. And I can attest that, 42 days seems about accurate. Now, as always, because we're a Toronto-based podcast, when when we break down some of the numbers, we're not going to look at the GTA numbers. We're going to look specifically at the 416. So we're going to look at the average price for the 416 and see what that looks like. So detached house prices still 1.6 million, right? So those are down 6.5% year over year, but still quite high. Semi-detached house prices have been fairly resilient, though. I mean, just under 1.3 million at 1.278, and they're pretty much flat, down 0.4% year over year. But I mean, let's just say that's flat. Townhouses down 5% at 957,000, and condos down 4% at 731,000. I mean, that's actually surprisingly condo pricing has still been fairly resilient considering the amount of inventory that's on the market. We are still floating 7,000 plus units on the market. And that pricing being only down 4% year over year is curious. I mean, it's interesting. We'll see if that continues to hold as we move on throughout the year, because with that much inventory and pricing still holding at a pretty high watermark, I'm not an economist, but to me, it seems like we might see some change there if we don't start seeing a lot of this inventory start to sell off. All right. Now let's get into some of the under the radar stats that I like to track on this channel to give us a really idea of the temperature of the market and what to expect. Now, these are leading indicators, which are sales to new listings ratio, which is the amount of sales that have happened in a given month versus the amount of new listings that have hit. So for the city of Toronto, only 34% of the new listings sold last month, which is quite low. As you know, if you've watched this channel, 50% is kind of the balanced market territory. We are well below that at 34% as an average in the city of Toronto. If we look at months of inventory is another leading indicator. So if there were not another property to hit the market, how long would it take to sell? And we're sitting at about 4.6 months. So generally 2.5 months is kind of a balanced market. But we are still quite a bit above that number, 2 months higher than that average. In the city of Toronto, since I've been a realtor, I mean, we've rarely seen numbers this high. In my 13 years in real estate, we've always kind of been below that 2.5 months of inventory as an average in the city of Toronto. I mean, there's been blips here and there, but for the most part, we've always been talking about things under 2.5. Same for sales to new listings ratio. We've also kind of hovered around 50 and above, right? So 50 to 70% in sales to new listings ratio. We're still in buyer's market territory. Really, that's what these numbers are saying. Now, as with anything, as with averages, there's certain neighborhoods and certain pockets that buck the trend and that are not necessarily right in that buyer's market territory. And as it's been, it's the same neighborhoods that kind of keep bucking the trend, right? So when we look at WO2, which is the west end of Toronto, so the Junction and some of those neighborhoods, we're looking at 46% sales to new listings ratio, so about almost at that 50% mark, so kind of balanced market territory. And the months of inventory says the same thing at 2.5 months of inventory. And then when we look at the East End, a lot of the East End neighborhoods close to downtown, same thing, right? So when we look at EO1, EO2, and EO3, I mean, pretty much all hovering near 50% and about 2 months of inventory, right? So when you head over to the East End, you aren't looking at the same numbers. A lot of these neighborhoods in the East End are actually more in balanced market territory. However, now when we look at central neighborhoods, you can see them right here. A lot of the central neighborhoods have a lot of condo product, so we are seeing numbers well below that 50%, in some cases below 30% in sales to new listings ratio, right? So if I look at CO8, which is downtown East, we are at 24.8% sales to new listings ratio. So only about a quarter of the new listings that are hitting the market are selling within a given month. And CO8 is sitting at 7.3 months of inventory. So it would take more than half a year to sell off all of the inventory in CO8. And if we look at the west side of downtown Toronto, Numbers slightly better, but still quite low, right? I mean, just under 30% at 28.6 for sales to new listings ratio and 6.3 months of inventory. But there's a number here that really stands out to me, and it's C12. So C12 is when we go further up Yonge Street, past Midtown. And we are sitting at, I mean, the sales to new listings ratio at 25%, so still about a quarter of the listings that are selling in a given month. But we are sitting at 9.6 months of inventory. So we are approaching on a year to sell off all of the inventory in C12. That is a big number, and that number is not going to change overnight, right? So when we look at an area like C12, there is if you're a buyer, there is a massive buying opportunity there. If you're a seller, I would say to hold off as long as you can, because adding more listings to that pocket of the city is not going to be helpful. Okay. So now that we've looked at some of the leading indicators, and if you're interested in getting the market watch report, don't be afraid to reach out to me, email me, text me, whatever. I'll send you this market watch report and you can look through the numbers on your own. It's also available on the Toronto Real Estate Board's website. Feel free to download it there as well. Okay, now let's head down to the HPI numbers. They're kind of a more smoothed out version of the stats that remove some of the highs and lows and kind of gives us a bit more of an accurate read on where numbers are at. For the first time in a long time, we're actually seeing the average sale price in the city of Toronto well below $1 million at $975,000 as an average. Detached houses at 1.5. That's kind of still within range. Semi-detached prices still at 1.2. One interesting thing to note is that semis and detached house prices are starting to get a little bit closer in terms of pricing. We haven't seen this in a long time. Usually detached house prices are well above semi-detached, and that gap is closing. And I would probably hazard to say a lot of that just has to do with affordability metrics, right? And anyone who is still looking to buy homes, they're able to get into those semi-detached houses rather than detached. So the numbers are kind of holding there, whereas detached house prices are a bit more of a luxury product, and they're getting a little bit more influenced by the overall market, and there's a little bit more downwards pressure on pricing for detached houses versus semi-detached. So something interesting to keep an eye on as we move forward. Same thing for townhouses. Now townhouses being at 778 and prices down about 6%. With the townhouse, that does include condo townhouses. So I actually feel like condo townhouses are actually kind of dragging this down, because what I've seen in freehold townhouses is that freehold townhouses as well have been holding very similar to semi-detached house prices. So one interesting note to keep an eye on there. And perhaps maybe I'll do a deep dive video into townhouse product specifically in Toronto. That's a really good idea for a video. I'm going to actually take note of that right after this podcast. And then condos dipped below $600,000 for the first time in a long time for the composite prices, and down about 8% year over year on the composite index. So yeah, numbers, interesting to keep an eye on. We're going to get into the under the radar neighborhoods in a moment. But before we do that, let's look at the month over month statistics that I teased earlier in the podcast. So if we look at 2025 here, the numbers, we've now dipped down, right? So we were kind of on this trajectory where numbers were going up month over month from January to May. And now from May to June, the numbers have dropped by almost $20,000 month over month. So not out of the ordinary. I mean, if we look at last year, the numbers went down about $3,000 from May to June. A $20,000 drop is a little bit more than the seasonally kind of the seasonality that we usually see in May to June, because we go from kind of a hotter sales period to a lesser one in June. But June is still spring market in most cases. So to see a $20,000 price drop is interesting to see. And it'll be interesting to see what that June to July number looks like. Last year, we saw almost a $50,000 drop. If we saw a $50,000 drop, we're below 1.1 million now going into July. So I'm not saying that's going to happen, but it'll be interesting to see what happens with those numbers as we move into the kind of doldrums of the summer. Okay. That's enough for the Market Watch report. Kind of gives us a basis for what to now expect as we go into our under the radar neighborhood. So let's get right into those right away. So as always, the first neighborhood we start off with is one of my favorite neighborhoods in the city, Oakwood Village. The most under the radar neighborhood for that entry-level luxury product that I always talk about. Oakwood Village is really the epicenter of York, Toronto's Brooklyn. So when we compare the average to the city of Toronto, average sale price at 1.2 versus city of Toronto 1.1, yeah, $100,000 more. But like we always do with Oakwood Village, it's not about the overall average in the city of Toronto. That's not what we're really comparing Oakwood Village to. What we're comparing Oakwood Village to are some of the neighboring neighborhoods. So the neighborhoods that abut Oakwood Village. So Humewood Cedarvale, almost 1.5 million versus Oakwood at 1.2. Now you're seeing why Oakwood Village is an under the radar neighborhood. Humewood sits right next to Oakwood, and you're paying a $300,000 or $250,000 premium to be in Humewood versus Oakwood. And you can even get a little bit more extreme if you look at Forest Hill South, which, yeah, it's a very different neighborhood, but it's almost $3 million to be in Forest Hill versus Oakwood. And really, it's just Eglinton West that separates these two neighborhoods. So it's a massive difference in price when you look at Forest Hill to Oakwood. Maybe not the most fairest of comparison, but yes, going back to Humewood, that $250,000 difference in price, average days on market about the same, median days on market about the same. All the other metrics are very similar. Humewood selling at about 103% of the asking price, Oakwood Village 104%. So really, again, Oakwood Village is one of the spots. If you were looking in Humewood Cedarvale or Witchwood even, look at Oakwood Village because you're saving, in most cases, a couple $100,000 by moving a couple of blocks further west. Okay, now let's move on to the rest of the under the radar neighborhoods, and we're going to compare these to the overall average in Toronto. So let's move to our next one. Let's move over to Briar Hill. Briar Hill, one of my other favorite neighborhoods. I live in Briar Hill, so I am biased. I always get that out of the way. But that being said, why do I love Briar Hill? Well, when we look at the average sold price in the city of Toronto at 1.1 million, the average in Briar Hill, and one thing to note is that if we look at the product mix in Toronto, Briar Hill, even for being a small neighborhood, is a very similar product mix. You have condos, townhouses, semi-detached, detached. You have new, you have old, you have some Victorian, you have everything in Briar Hill, right? So the types of homes that are selling in Briar Hill are very similar to the overall average in the city of Toronto. So when we look at the average price of under $900,000 at $897,000, you really understand why Briar Hill is an under the radar neighborhood, because also very similar to Oakwood Village, it's actually situated just north of Oakwood Village, and it's actually situated right next to Forest Hill South. So Forest Hill at $3 million versus Briar Hill at $900,000. And yes, you're not getting the same type of property, but you are situated right next to Forest Hill. So you can get some of the amenities and some of the cool, some of the nice parks. And if you're actually in some of the condos and apartment buildings on the east side of Marley, you can actually send your kids to some of the Forest Hill public schools. So one thing to note when looking at Briar Hill, you're saving a ton of money and you still get the access of Forest Hill and all the great amenities that exist in Forest Hill. But that being said, when we just compare the averages to the overall city of Toronto, a lot of the other numbers are very similar in terms of average sale price to listing price and average days on market. But the big thing here is price. You are getting a massive discount to buy a home in Briar Hill, which has new LRT coming. Looks like it's opening in September. Has 2 LRT stations that are going to be running through Briar Hill. And Briar Hill already has a subway station at Eglinton West. And excellent neighborhood if you're commuting. You also have access to Allen Road and so on and so forth. And the same goes for some of the other neighborhoods that we are going to look at on this list. So the next neighborhood we are going to look at is Caledonia Fairbank, which sits right next to Briar Hill. And the average price here, actually, Caledonia Fairbank is also showing a lot of price resilience. So average selling price in Caledonia Fairbank is just under 1.1 million, under that Toronto average at $1,050,000. But that used to be a bigger spread. If you follow this podcast, you used to see a big spread between the overall average in the city of Toronto and Caledonia Fairbank. So if anything, Fairbank is showing some price resiliency. And I think more and more people are catching on to Fairbank as being one of the under-the-radar neighborhoods. And that average selling price to listing price at 105% is an indicator right there. The 21 days on market is another indicator there versus the 28 average days on market for the city of Toronto. So homes are selling quicker here and above asking. Actually, almost 43% of the homes last month sold above the ask price. And the median days on market is only 10. So Fairbank is starting to catch a little bit of momentum. That being said, there's still great value in Fairbank. So as this momentum continues, I think there's still an opportunity for a lot of buyers to get into a neighborhood like Fairbank because there's still value there. And just like we talked about in Briar Hill, you have all the LRT stations. You sit right next to Oakwood Village and not too far from Forest Hill as well. So you still get all those great amenities of Oakwood Village and Forest Hill. And Fairbank actually sits just north of Corso Italia. So you also get all of the great Corso Italia restaurants and shops. There's actually, a quick side note, St. Clair West is exploding with growth of a lot of great small businesses. It feels like every day I wake up in the stretch from, let's say, Christie, not even as far as Christie, let's say like Arlington to Caledonia, that stretch of St. Clair West, so many great businesses. So if you live in Fairbank, you have great access to St. Clair West and all the great new spots opening up along St. Clair West. All right, now let's move on to the next under the radar neighborhood of Keelesdale. So we looked at Oakwood Village, we looked at Fairbank, we've looked at Briar Hill. Now let's look at Keelesdale. Keelesdale, $900,000 overall average versus the city of Toronto at 1.1, so another $300,000 savings. And the coolest thing with Keelesdale right now is there is so much development coming to Keelesdale. It is wild. I'm in the process of creating a video right now on all of the development in Eglinton West, and a lot of the super large scale developments are going to be happening in Keelesdale. So watch out for that video and really dive into all of the development there. But thousands, tens of thousands of new apartments, condos, townhouses, and stuff coming to Keelesdale. And main reason for that is that Keelesdale actually has 3 new LRT stations that are going to be cutting right through that neighborhood, right? So you have Mount Dennis, you have the stop at Keel, and then you have the stop at Caledonia, which kind of they share with Caledonia Fairbank. But three stops kind of in that Keelesdale area on the new LRT, and then you have the new Mount Dennis transit hub effectively set to open, which is going to have the LRT. It has a brand new Up Express station, so they're adding an Up Express station before Weston, which is amazing, and a brand new GO station. All of that in Keelesdale. So Keelesdale is going to be a very convenient neighborhood to live in once that new Mount Dennis kind of transit hub opens up. So really looking forward to Keelesdale, and to get a $300,000 savings overall versus the overall average in the city of Toronto is not something to scoff at. But with that being said, I mean, we're still pretty much in buyer's market in Keelesdale, right? I mean, still taking about 30 days to sell homes there. Only 35% of the homes are selling over the ask price, and homes are selling on average about 102% selling price to list price. So a lot of value in Keelesdale as well. Okay, so that about wraps things up for the under the radar neighborhoods, right? So if you're interested in any of these under the radar neighborhoods, I put links down below to some of the other content I've created on these neighborhoods if you're just looking for neighborhood tours or getting some ideas of where you should be considering. One of my most recent videos I did on Oakwood Village. Take a look through that. Great video if you want more information on any of those neighborhoods. So that wraps things up for the under the radar neighborhoods. But something else that I wanted to touch on when I was looking through some of these Habistat reports, and Habistat has a lot of great charts and stats that we can look at as realtors, help inform you, our clients. So they have this market insight about sales price by distribution. So this kind of gives us an idea of the hottest sale prices in the city. So when we look back at the market watch and when I was talking about semi-detached house prices and kind of having a lot of resiliency in terms of pricing, when I was looking through like what are the hottest sale prices in Toronto, like where are homes selling, what's selling and at what price point, this came up to me. So 15.1% of the homes that sold last month were in that $1 million to $1.25 million range. So that had me thinking. So number one, that's showing up in the average sale price for semi-detached homes, right? Semi-detached homes haven't really seen a massive drop in pricing. Some of that might have to do with what homes people are going after. And that $1 million to $1.25 million price point seems to be very attractive to a lot of the buying population. And a lot of that is just due to demographics. When we look at who is the largest cohort of buyers of homes right now, and it's likely older millennials. And older millennials are in that stage. I am an older millennial myself. We are now in our 40s, which is scary. We are now at that stage in life where we may have already owned a condo or a townhouse, or we might just be becoming first-time buyers, and we've saved up and we've rented for a few years, and we're looking to buy our first homes, and we're looking to either expand our families or just starting to have families. And a lot of us are now looking for larger spaces rather than just small one-bedroom condos. And a lot of the young professionals out there, when you're earning a certain level of income, you were able to get into that $1 million to $1.2 million price point. And with that as well, with some of the new changes in mortgage rules, right now you're allowed to get CMHC insurance up to $1.5 million. If we also were to group in the $1.25 to $1.5 million price point, we're looking at 25%. So a quarter of the sales in Toronto was between $1 million to $1.5, which is a big number of homes. And I see that in my own kind of clientele. That's where a lot of my clients are looking in that same price range, that $1 million to $1.5 million range. So that also then signals to me, and that's kind of now making a lot of sense when we look at some of these numbers like the semi-detached homes, why semi-detached homes are kind of holding value at that $1.2 million range, because that's where all the buyers are. And when we look at even like the numbers here, so I pulled up on ratehub.ca, like a $1.2 million house, what type of like kind of payments you're looking at, right? So right now, if you're able to get this great 3.845 year fixed, or if we look at the big bank over here, 4.14, right? We look at the mortgage payments anywhere from, if you have 20% down, you're able to get about $5,100 a month. But again, with the new CMHC, you're allowed to put less than 20% down. So if you even look at the bare minimum of just under 8% down, which is $95,000 down, you're looking at a mortgage payment of just under $6,000 a month. And when we look at, then I also then looked at, okay, what's the average take-home pay for someone earning about $100,000 in Ontario? And we're looking at about $73,500, right? So roughly per month, what are we looking at? Your take-home pay, let's see. So let's say if you're a couple and you're both earning about that, right? So let's say that's like 146,000 divided by 12. So you're looking at about 12 grand a month. So with a mortgage payment at about $6,000, even if you only have $95,000, that's about 50% of your take-home pay, which, and we're not talking gross pay, that's take-home pay, that's kind of normal for this market. So it doesn't surprise me if you have a lot of double income millennials who are able to save up that $95,000 plus an extra $30,000 to $40,000 in land transfer tax and closing costs. So let's say if you have $150,000 to $200,000 saved up, you're still able to get into the market right now. So it doesn't surprise me that that segment of the market is actually doing still quite well. And then if you were to take that budget and kind of bring it over here to some of these under the radar neighborhoods, and we're seeing it in Fairbank right now, you're able to get a really nice, in many cases, detached or a large semi-detached, fully renovated or brand new in some cases, newer homes in these pockets at these price points, which is very attractive. So that's why we're seeing a lot of increased interest in Oakwood Village and Fairbank and soon to be Briar Hill and Keelesdale. We're seeing a lot more interest here because of the new transit and LRTs and so on and so forth. So it was just an interesting thing that popped out to me when I was looking through these sales price by distribution. Shows where a lot of the competition is as well in the market. It also shows that buying in these neighborhoods, you're showing some resiliency and you're showing some, as rates get better and as affordability starts returning to the market, that there's still a lot of room for upward trajectory in these neighborhoods, especially if you're getting in below that $1.2 million price point. You can see where there's still a lot of room for growth in these neighborhoods with people's income levels. But anyhow, interesting thing to take a look at. I want to just now quickly pivot and end off the podcast. I just want to kind of quickly touch on City of Toronto. You'll see it right here on the screen. It votes to allow sixplexes in Toronto wards, leaving some of the Toronto suburbs to opt in. So that is the key word there, is that this wasn't a blanket to allow sixplexes right across the city. Now you'll see here, I mean, when some people hear sixplex, they think, oh, I'm going to build an apartment building right next to me. The city in their report showed a picture of a sixplex, right? And it looks like a regular house, just has 6 units in it. So anyone who's afraid of having 5 and 6plexes as their neighbor, it's not like you're going to have this massive monstrosity built next to you. It's a very normal looking size, very normal looking home, just happens to have 6 units in it. And it doesn't necessarily mean you're going to have 30 people living next to you. Most of these 6 units are likely going to be couples or maybe a family, 3 to 4 people, not a ton of people living right next to you. That being said, I mean, you look at some of this article here, like from Stories, Toronto shies away from citywide sixplexes and dilutes the allowances. So what does that mean? So what happened, if we look at my colleague here, Dan Foch, what he just posted, here's the map of where sixplexes are allowed. And it's pretty much, so here, I'm just moving my thing. So 6 units as of right, the current neighborhoods was really just Scarborough North. And when we look at where it's going to be allowed, it's not really that many places in Toronto. So where is it? I had a list somewhere here. So Ward 23, which is up in Scarborough, and then we have Parkdale High Park, Davenport, Spadina Fort York, University of Rosedale, Toronto St. Paul, Toronto Centre, Toronto Danforth, and Beaches East York. So really just downtown and east is where you're allowed, and then Scarborough North is the only place you're allowed to really build sixplexes. So this wasn't citywide. It was just a few downtown neighborhoods and a couple of spots in the East End, and that's pretty much it. But Etobicoke was shut out, North York was shut out, and York shut out, which is quite wild. And it comes with some pretty severe consequences, right? So as we all know, the current Liberal government has tried to accelerate more development and create more housing in Canada. And some of that is, so there's a huge fund that municipalities have access to build out some of the required infrastructure to accommodate all of this extra building. But we have an issue in Toronto when we don't apply it citywide. are we still going to get the funding? That is unknown right now. I would be shocked if the federal government still allowed that funding to come through without Toronto adopting it across the board. But it was surprising to me that we have strong mayor powers, and the mayor, I don't want to turn this to a political podcast, but the mayor didn't just push this through to get all this funding. And there's this article here by John Michael McGrath and TVO saying that Olivia Chow could have, not that she should have just pushed this through, but she could have gave councillors a clear choice, like it says right here, either accept the sixplexes citywide or accept the mid-year property tax increase required to fill the budget hole. And I think if she had presented it to the councillors in that manner, we might have seen a very different vote. Because right now, if we lose that funding from the federal government, we can then expect property taxes to then go up, and maybe perhaps they would have gone up anyway, but Toronto has a funding issue, and not having that extra funding is not a great look. Now, how do I feel about the sixplex zoning? I think it's something that we do need in Toronto. I think it certainly will help create a lot of new rental product that we desperately need in the city. We have seen a lot of large scale developers starting to build rental buildings all over Toronto. They've kind of moved away from condo product because condos really aren't moving that well. And they are filling that void in terms of creating new rental product, which is sorely needed. But there has to be a diversity of rentals, and it can't just be all high rise. If you want to rent, you shouldn't have to live in a high rise building. And this sixplex, multiplex zoning change helps fill that void, where if you're a family, not all families necessarily want to live in a big high-rise building. You want to live in a neighborhood and have access to all the neighborhood amenities and schools and so on and so forth, right? So I think it's really important that we get all this done. That being said, there are some downsides to this overall sixplex zoning across the board. I would have liked to see in there maybe an inclusion that, or maybe some type of guidelines around building small multiplex condo buildings, because I have a feeling that most of these multiplexes that are going to be proposed are going to be just for rental, and removing a lot of single family homes from neighborhoods puts a lot more upwards pressure on pricing for a lot of these single family homes. And if you're a family who are looking to own and buy real estate in the city of Toronto in some of these neighborhoods, not everyone wants to necessarily rent, and some people do want to own. And if you're now fighting against small developers and builders for sixplexes, it might actually start increasing the price of some of these homes in these neighborhoods, right? And I'm not here advocating that we need to just protect housing solely for single family homes. I am a big proponent of density, but I would have liked to just see something in there to say, hey, if you're a builder and you want to grab one of these small detached bungalows, here are the rules and regulations on how to turn this into a small condo building rather than just rental. So you can kind of still flip that property into maybe 6 units. And there's some great developers doing some of that. Blue Lion, they're one of the few developers who are building these and building them really, really well. So I'd like to see a lot more. I mean, I'm sure Blue Lion doesn't necessarily want a ton of competition, but I'd like to see a lot more of this type of development with small scale condo buildings where you have 4 to 6 units on a lot, where people can still buy, own equity, and plant roots in these neighborhoods and not have to necessarily worry about the whims of a landlord in a sixplex. And they want, a lot of people just like the idea of owning. I mean, owning is a bit of a luxury, but a lot of people do like the idea of owning. And that's the only kind of slight negative I see with this. Not a huge negative. I still want density, and I still want more people to be able to live in the city of Toronto. And ultimately, this does help the city of Toronto. And I hope that this rule around multiplexes gets amended, and it is going to be citywide and not just in some of those exclusive little neighborhoods, and it gets applied citywide. So that's about it for this week's podcast. Again, thanks for watching. Lots lot more content on the way. I was kind of lazy throughout June. Not lazy. I had a lot of stuff going on with kids ending school and all that kind of stuff. There's just so much getting in the way of me doing these, but I really wanted to make sure the podcast still got done, and it did get done today. So thanks for watching the podcast. A lot of cool videos on the way, a new podcast coming really soon as well. And a rebrand coming soon. So you're going to be seeing some updated graphics and stuff coming soon as well. All that stuff is coming. Thanks again for watching. Remember to like, subscribe, share this podcast with your friends if you like me and if you like the podcast. And that's it. Thanks again for watching. Peace out.